Testing. All right. Good morning, good afternoon, good evening, wherever you are in the world. Welcome to Understanding the Forex Market. Today's program is actually sponsored by Do Prime, the official sponsors of Manchester United. All right. My name is Samuel Ajitia J, and you all know me as Dr. Mola. I'm actually your presenter for today, and I'm going to take you through this very course. This is actually a course that we're going to dive into it for about 90 days, all right? Because within a month, we will be done with the course, basic course, and then we would continue building on what we started today, okay? So you are all welcome to Do Prime, first ever webinar in Ghana, hosted by Dr. Mullah, also known as Samuel Aditaji, sorry. Dr. Mullah is what everybody knows. So guys, without wasting much time, I would like to kick starts. Today, I will not do any introductions, so I'm kicking starts. A lot of you have heard about the Forex market so many times. Forex. And some of you are even obsessed with the images we put across sometimes, like charts, profit, questions, answers, all this stuff. So today you are here and you would get all the answers you are looking for right now. Okay? You would get all the answers. First of all, if you are now joining, we have not started anything at all. When it gets to the question and answers, you can ask all the questions and you can ask to us as well in the chat box, and then I will answer them as I proceed, or I wait for the end. Right? So let's start understanding the Forex market. So today, we are going to look at the Forex market in details. First of all, what is Forex? Who are the participants? And all of those things. We're just going to look at them and you are all going to love it. Forex is a very huge industry, an industry that is making millionaires each and every single time. And don't forget, if you don't follow the rules, it's likely that you also run some losses, right? That is why today I've taken it upon myself with Do Prime behind my back sponsoring so that we will go into it step by step. Some of you will be asking yourself this question and you keep asking, what is Forex? What is Forex? What is Forex? Forex is nothing at all right? In layman's term, Forex Bureau Online, all right? And I'll explain as we proceed. So just keep it in your mind. Some of you will be asking, hey, then we have to get an office. No, you don't need an office. All that you need is your smartphone, an internet connection, and you being alive. That's all you need. And you are in this business for life. The business that is going to transform your life, right? So we're going to look at the financial landscapes, some of the terminologies or all of the terminologies, if we have the time, and how we can also participate and make money. Yes, that's the most important part. I don't think some of you waste your credits or your airtimes or your data bundles just to come here to have fun. The reason is because you also want to make some money, right? Yes. So we're going to take you through. You are going to understand the fundamentals, every single thing about the Forex market. If you have a question, please don't forget to write them down in the chat box. I'll read it out and I'll answer them. Okay. All right. Let's go on. Sorry. So first of all, we are going to look at the very big question that a lot of you have been asking. What is Forex? Okay, that's a very big question. And I told you earlier, Forex is nothing than Forex Bureau online. Now I'm going to ask you some simple questions. Then you think over it, and then we're going to move. But before I do that, I would define Forex. Forex is the simultaneous buying and selling of currencies, commodities, indices, bonds, stocks, whatever, simultaneously. All right? It is the biggest financial market in the world. The biggest, by far, the biggest financial market in the world. On average, we have about 7.5 trillion US dollars in this very space. I'll ask you again. What's your plan? What's your goal? You want to make $1 million? This is the industry. All right? You want to make $1 trillion? This is the industry. There is no industry in the world which is actually big like the financial market. There is no industry at all, not at all. Right? All the other industries are in billions. It's the only Forex market that actually has about 6.5 to 7.5 trillion US dollars on average each and every single day. This is the amount of monies that comes into the market. So if you want to be a millionaire, then you are in the right space or you are in the right place. You have not mistaken at all. You are here. Now let's explain the term. I said it's a simultaneous buying and selling. Let's use a grocery shop, for example, as simple as ABCD. So you went to the grocery shop to buy some eggs, or you went to your favorite wache joint to buy wache. Okay? For those of you who are not Ghanaians, wache is a kind of food in Ghana. So you went to your favorite joint to buy wache or whatsoever. You are holding money in your pockets. Let's assume $1 or $2, $3, $4, $5. What the amount is. So you put your money in your pocket, and this is where the definition of simultaneous comes in. You gave the money to the wache seller. In Forex term, you sold your money to the wache seller. The wache seller bought your money. Then the wache seller sold her wache to you, and you bought the wache. Can you believe that we've all done buying and selling at the same time? Yes. It's no longer an exchange. It's a buying and selling. We've done that. Now that is how, or that is what we mean by simultaneously. We're doing the two at the same time. Let's move on into the technicalities of Forex trading. Let's assume, all right, I quite remember way back when I was a kid, we used to buy dollars and keep it under books and some areas, and we have it in mind that it will grow against the Ghana cedis. Okay? And yes, sometimes our predictions are right. Then before you go and change the dollars back to cedis, you have made some monies. So let's keep it forward. I'm going to give you another scenario. So let's assume that you know one particular area or one particular forex bureau that has or is selling dollars. The forex bureau is selling dollars at 10 cedis now. And you know another forex bureau, okay, that is buying Ghana cedis. Sorry, the US dollars at 15 cedis. I know what you are thinking. Yes, what you are thinking is right. So as a smart individual like you and I, what we'll do is that we'll go to the man that is selling the dollars for 10 cedis. We'll buy as much as possible. We run to the other one who is buying it at 15 cedis and we sell it to him. We make profit of 15 cedis on each transaction. Sorry, we make profit of 5 cedis on each transaction. But what if I'm telling you that you don't have to run from one bureau to another bureau, but there is a button that you just click and you make money? How many times will you click that button? How many times? I guess by now, a lot of you will be saying so many times. Yes, so many times. You're going to click the button, you click, so that you make a lot of money. That is Forex trading. So in Forex, all we do is click a button on a forecast or a prediction, and then, hooray, the magic happens. We make profits, and sometimes we make losses. Let's move to the second point, which is importance of understanding the Forex, understanding the Forex market. All right. It's a market where everybody can get into. You all, everyone here. Once you have a smartphone, you can get into this space. You have internet. Don't worry, you have qualified. The next thing is you being alive. And that's it. Okay? That's all you need. These are the tools you need. The rest of them would come over time, like experience and all of that. So we're going to make predictions on exchange rates, and then we would see which one is going to go our way. And most of the time, it goes our way. Sometimes we lose. And in most cases, when we do this, we make a lot of money. This is the industry that we are talking about. Today, we would explore the fundamental concepts, that is the key participants, the factors, all right, and the things that affect the Forex market. We would look at all of that. So let's go. Overview of the Forex, overview of Forex trading. What is the overview? Like I have defined already, one, we need to buy and sell simultaneously. All right. We have experts among us that always gives accurate forecast signals on signals each and every single time. All right. So for you to learn and become an expert, actually, it's sometimes hard, but with determination, you can actually do all of that. All right. So with determination, that is the word, determination. You want to change the situation at home. You want to make things happen. This is the platform that makes things happen. This is the platform. There's no other platform I have known. Some of you will be like, Doc, what do you do aside trading? The truth of the matter is, I don't do anything. I just sleep, eat, and trade. When I wake up, I trade again. That's all I do. I don't have alarm close to my ears. The only alarm I have is to go for workouts. That is exercise, training sessions. Those are the alarms I have. But I sleep, I woke up the time I want, the time I like, and life goes on. All right? If you want to live the dream like this, then this is a platform. You have no problem at all. Okay? Now let's look at the participants of the Forex market. Before I will go into that, I'll give you a little history about this market. Before, this market was meant for rich people. Yes, filthy rich. Not small boys like you and I. We don't even qualify. We don't qualify. Okay? So it took innovations of some great people. So before, it was about $100,000 before you can trade the Forex market. How many of you have $100,000? None. But if it is $100, $50, $200, $1,000, we will have a lot of people to join right now. That's how come some people like Doe Prime came into the picture. So before you actually start trading, you need a broker. And the best broker in the world is Doe Prime. Yes, no two ways about that. Let's look at the participants, the major key players of the Forex market, the key players. We have investors. Okay. We have large institutions. Yes, I stress the large because not ordinary institutions, large institutions like some of the names even cannot come to mind. We have the central banks, all the banks in all the countries in the world, they participate in this very business. Then we also have you and I, speculators. We have you and I, the speculators. We fall into this category. We also have banks, big banks or super banks, Deutsche Bank, JP Morgan's, Stanley's, EcoBank. We have banks, Barclays. All right. Yes, we also have all these banks, these big banks. We have all of them. They all participate in the Forex market. Okay. That's good. But like I said, with the help of some institutions like Doe Prime, now you and I can also come to the platform and we can also trade and make some monies, right? So it all depends on you, how you are coming in. Are you coming in as a speculator? Are you coming in as an investor? It all depends on you, what exactly you want, okay? All right. How currencies are traded. How currencies are traded. Currencies are traded in pairs. With the earlier example I gave you, when we went to the grocery shop to buy the eggs, or we went to the waakye seller to buy the waakye, we first of all bought the waakye with our money. Okay, we sold the money to the waakye woman. The waakye woman collected. She bought our money and sold her waakye to us simultaneously. So for a transaction to happen on the forex exchange market, currencies are always tied in pairs. One currency to the other currency. So whenever you go to the banks, probably you would have noticed that we have GHC slash USD or versus USD like this, or GHC versus GHC versus Euro. Yes. All right. They are always in pairs. Always. So we trade the currencies in pairs. And we'll look at that. Today, we are just doing a warm-up of whatever we are about to learn. Like I told you, by the end of this course, you will become a pro, a professional, a master of the Forex market. We're going to give out some tips also on that. All right? Good. So currencies are always traded in pairs. The first currency, the first one to your left, we call it the base currency. And then the one to your right, we call the quote currency or the counter currency. Technically, whenever we click on the buy, we are buying the base currency. At the same time, we are selling the quote currency or the counter currency. It will be clearer when we get to the practical session. All right? Everything will make sense, a lot of things. And anytime you click on sell, USD, anytime you click on sell, it means that you are buying the quote currency or the counter currency, hence selling the base currency. This is how the Forex market operates. All right? It will be clearer. Don't worry. If you don't understand, don't worry at all. The session is also recorded, so probably you would also get a recording version of it. Now, each of the sectors that we mentioned earlier, we are going to look at them. That is the major participants. The major participants. So we have the central banks. The central banks. These are the the biggest of all. So the Central Bank of the United States of America, or they call it the Federal Reserve of the United States of America, they trade Forex. The Central Bank of Europe, they trade Forex. These are the key players. And you can mention any of the G8, the Great Eight, the Japanese, the Australian, New Zealand, Switzerland. All these are major players. They are the movers and shakers of the market. And always remember this. currencies are direct reflection of their economies. Okay? Currencies are direct reflection of its economy. So if we have Ghana cedi and the US dollars, where's my cursor? If we have Ghana cedi and the US dollar, so let's say GHC and then the US dollar. Right now, and USD. You need 15 cedis. Okay. It's technically it's 14.5 now to get $1. It also means that the US economy is 15 times better than the Ghanaian economy. Are we following? The US economy is 15 times better than the Ghanaian economy. So currencies are direct reflections. Due to this, these central banks or the banks of the country have some role they play. They term it as monetary policies. So when their economy is or their currency is not doing so well, they will bring a policy. And this policy would either help them to gain some kind of momentum, or it will hold their economy. It will hold their currency for some time. All right. We will get to know about that when we get to the fundamental session, I think 2 weeks from now or a week from now. We will definitely get there. All right. We would understand what it means. So they formulate policies, and these policies are always in the good interest of the economy. So by so doing, the currency would appreciate in value, or they will maintain the value. That is what these central banks do. But in our own cases, in Ghana, Nigeria, and some of these African countries, our case is a special case. Especially in Nigeria, they have a special case. Their government is not doing anything to support the Naira from falling, but rather they are encouraging the Naira to even fall more. In Ghana, ours is almost the same, but not to the pace of Nigeria. Yes, sometimes we make fun of these things. Not because we just like to make fun of it, but rather we would also like to learn from it. Okay? So in the US, they always make policies that would favor their economy. It will not bring the currency down or depreciate, but rather it will help the currency appreciate. All right. Then we have financial institutions. We have the hedge funds. We have the banks. We have these big guys who has a lot of monies. Some big guys that have monies, right? They call themselves market makers. All these people are players in the forex market. They are players. So if you also have the amount of money these guys are having, you can be an individual, but you would also claim these titles. Let's say you have about $100 billion. Yes, you can also come in to be somewhere here. You can come and you'll be part of this group. Okay. Then we have the corporations. we have the corporations. These are investment companies. All right. They are not to the levels of hedge funds or whatsoever, but they are also small companies that have a lot of money that participate in the forex market. Then you and I, we are the last people. We are the retail traders. Retailers. We are the last. And our rule or our role in this industry is we are in to win. We will not lose. But the problem is that the retail traders even lose more than all the other aspects of all the other players. Because retail traders do not acquire the skill set needed to trade the forex market. They do not acquire. You have to acquire the skill set needed to trade. All right? That is why Doe Prime has taken it upon itself to train all of you so that you acquire the skill sets. You know exactly what you are doing. Okay? That is why I'm here teaching. I'm here teaching and teaching and teaching. Not because of anything. We want to enlighten all of you to have understanding of whatever you are doing. When you click that button of buy, you know exactly what you are doing. You click that button, sell, you know exactly what you are doing. So retail traders will make profits from the small fluctuations in prices. But with the others, they can make profits in other diversifications in the forex market. There are lots. We cannot go into details of all of that. Let's continue. Currency pairs and exchange rates. Like I gave you earlier, anytime we are talking about currency pairs, we'll definitely be talking about rates because currencies are traded in pairs. All right. And to gain or to gauge the strength, we have to pair them so that we can see which is stronger or which is weaker. That's basically it. So we move quickly from this slide and then we come to here. Factors affecting the forex market. What are the factors? 1, economic indicators. 2, geopolitical events. 3, monetary policies. 4, market sentiments. Some of you will be like, Doc, what are all these things? I always make a point to, or I make a reference to these things. When you start trading, you would see that we have a graph. No, our graph is like this. So we have price here, and then we have time below. So the asset can move like that. So we have price and time. And basic or the little knowledge of how they call it, statistics, tells me that anytime you see a graph, there is a data set. And this is where forex traders have a lot of problem. In forex trading, we have 3 different types of analysis: fundamental analysis, technical analysis, and sentimental analysis. We would learn all of these things. Don't worry. We will learn it. Technical traders, they feel that the charts is the one that actually draws the data, or they don't even believe at all in the data. And they also don't focus on the sentiments, the feelings of other traders or participants. It's like going to war holding a knife. You've dressed full armor, all right, but you are holding a knife. It's 99% accurate and sure that you will die. All right. So we have to dress up or armor ourselves from the head all the way to the toe. They say arm to the teeth. Yes. You have to be fully armed. So once you know that the data set, which is the fundamental analysis, the news, is what is drawing the charts, you have solved one mystery. And you are on the way, or you are on the path to success. Right? That's one part. So what are some of the things that affect the Forex market? Like I said, economic data. And what are these economic data? We have macro and micro economic data. Macro and micro. But first of all, let's look at the macroeconomics. We have the GDP, inflation or CPI. We have unemployment. We have PPI, CPI, PPI, and it continues. All these data, when we put them together, when we get to the fundamental analysis, I would explain all of them and what you should be looking out for each and every one of them. All these data, when they drop, they would help in the chart going up or the chart going down. This data is the direct reflection or representation of what we see on the charts. Then we have geopolitical events. This, I will put it as war or political instability, peace treaty, and all of that. Let's put all of them as geopolitical events. So here I said political instability, trade agreements, and other geographical development can influence currency movements and investor sentiment in the forex market. Right? So these things can help the assets to go up or to come down. These informations. That is why we have to understand. In recent times, like 2-3 weeks ago, gold was just going up like that. And some traders wanted to sell gold, but gold did not agree, and it was just going up. Everybody was asking, why is gold going up? This is the reason. Geopolitical events. We have Israel and Hamas. These two guys are showing their powers. These two guys are showing their powers. All right. So that was fine. Okay. They are showing up their powers. What are they doing? This one says, I have nuclear weapon or a non-nuclear weapon, and then they try to test it. The other person also came in with drones. And they are just showing their powers, how powerful these two countries are. We will be here to write the commentaries. And our commentary that we'll be writing should be in our checkbooks. Somebody will be asking, Doc, how? Yes. When there's war is money. War is rich people's money, right? So you also take advantage of the war. If you are in the war, then you cannot take advantage of it. That is the only funny aspect of it. But once we are sitting afar, we will record the dollars in our accounts. That's what we do. All right? So, in times of war or instability and all of these things, investors tend to do one single thing. They look out for safe haven currencies or safe haven commodities. And one is gold. So gold, they will keep buying it because there is instability. They think that gold does not devalue no matter how. It will always maintain its intrinsic value or its natural shine. The price of gold from the time you were born to today has not been the same. It keeps going up. It does not come down. Even if it comes down, it will still go up. That's basically it. Then we have central banks. Like I said earlier, the central banks always have the interest of the economy or the country at heart. They do things that will favor the country. That is, their assets, which is their currency, would gain value or it will be a par. As simple as ABCD. If you have any questions, you can ask in the chat box. All right. Then the last part, sentiments. The psychology of people, how the people are feeling, the risk appetites. What are they thinking? So when the Israel-Hamas war started, the sentiment was that let's buy gold, and they keep buying gold. Gold will not lose its value. They keep buying it. This is what we are talking about. And you have to know all of these things. It's very, very important in trading. All right. Now let's look at the strategies that we can deploy in Forex trading. Let's look at the strategies. We can deploy technical analysis or fundamental analysis, or we can also fall on some part of technical analysis, which is trend following or scalping. It all depends on you as a trader. Which parts do you want to be, or which parts do you want to fall under? You want to fall into both fundamental and technical, or you will have one part of the pie, which is technical or fundamental. I will say use both. When you use both, you are always in safe hands. Yes. Now let's look at them one after the other. Technical analysis. Technical analysis, we are using historical price charts or price data to predict the next move of the market, And I always tell people that, or my student, that whatever happened in 1998 or whatever happened in 2000, when the US economy was at its knees, all right, in the year 2000 or 2005, thereabout, the US economy was at its knees, was in uh, uh, how do you call it? A downside, all right? So the policymakers actually formulated some policies, and that started to see some improvement in the economy. So let's assume in the near future, US economy is now heading towards depression again. What do you think the policymakers will do? They will do the same thing they did in 2000, the same things, right? Because those same things yield the results they were looking for. Maybe there will be a slight change, but 90% of it will be the same. All right? What will happen then? The patterns that were drawn from 2000 would occur again in 2025 if they are applying the same rules. The same patterns would be drawn. And this is technical analysis. Market repeats itself. And because of that, we use chart patterns, mathematical calculations of some stuff, and then we use to calculate all these things, which we call indicators or technical indicators. All right. Then we have the fundamental analysis. Fundamental analysis. Then the sentimental. But once I'm from fundamental, I'll not go to sentimental because fundamental has a other branch which sentimental would fall under. So I won't go there. I'll jump into straight strategies. All right. So let's go for it. So fundamental analysis. We evaluate economic data, both political and market-related factors, to assess the intrinsic values of currencies. That's what we do with fundamental analysis. So we go, we read the data, and then we can do analysis based on the data that we have. All right. Under this, when we see the data, we can have a feeling whether to go short or to go long, or whether to buy or to sell. So sometimes the data can tell us what will happen in the near future. And because of that, we would have a feeling to short or to long an asset based on the fundamental data. Okay? Then we get into the strategies. We have 4 different types of strategies or traders. Let me put it this way. Traders. We have the intraday traders. All right. We have the scalpers, long-term traders, and then we have the swing. Let's look at these two. Trend following can be a long-term or a swing trader. And then we have the scalpers. So what type of trader do you want to become? Then when we are from here, we will look at the risk and considerations or the characteristics that we have to. I always tell my students that, see, I cannot turn all of you into scalpers or all of you into swing traders. You cannot all be the same. No, it's not possible. Each and every person has a way or a style by nature, it reacts to every single thing. So by so doing, your style of trading will differ from my style of trading. But my work as a trainer is to shaping your direction. All right. So let's go for it. We are coming to considerations. So before you pick your side, you have to know all of these things. The risk. Let me draw it well. The risk and considerations. Currency risk, leverage risk, volatility risk, and liquidity risk. It's all risky. This reminds me of Jim Rohn. He says it's all risky. He will tell you something about life. You won't get out alive. It's all risky. Okay, so I've had one question from Emmanuel Mensah, and I will tackle that. Emmanuel, I've sent your question, and I will tackle that. All right. Okay. So the currency risk. Let's look at the currency risk. The risk of adverse movements in exchange rates, which can impact the value of assets or liability. Wow. Denominated in foreign currencies. All right. That is the currency risk. That's the currency risk. So we have to understand these things. We have to understand these things. All right. The currency risk is very, very important. Currency risk. Okay. All right. Let's go for it. And then leverage risk. Some of you love to risk a lot on leverage. I learned there's a broker that is actually even giving unlimited leverage. I don't want to say certain things. I don't want to. But for you to trade on high leverage, remember, you can make high returns. At the same time, you can make high losses. So we say a leverage is a two-edged sword. All right? It's a two-edged sword. It can cut in the front direction and cut in the backwards direction. It can make a lot of profit for you. At the same time, within a split of a second, you can lose your entire fortune. So when you are leveraging, please leverage with caution. Very, very important. Or you can ask some experts like myself to help you with leveraging. All right. That's the least I can do for you. Because if you don't do that, like I said, it's a two-edged sword. It can amplify your profits, amplify your losses the same way. So you have to be very, very careful. Then we have volatility risk. The volatility in an asset. When we talk about volatility, we are talking about momentum or activities or transactions in that particular asset. Some assets are very, very volatile. Others are less volatile. With me, I love volatility. I don't like assets which are less volatile. Probably you would have a different perspective of that. You probably may love low volatility assets. A friend of mine actually loves Euro CHF because he says that that asset is low volatile. He can place a trade and forget about the trade. He comes back anytime and close it. Right? Yes. But with my assets, I trade gold. I can't leave it and go to sleep. It's impossible. By the time I wake up the next morning, I'll be broke or I'll be super rich. So I have to choose everybody and what they like. Based on your background, the way you feel, or whatsoever, you probably would fall into one of the categories. One of them, you fall into it. Okay? So you have to choose. I don't know how much risk you love. I don't know how much risk you love. So I cannot teach you the assets or the risk or the instruments that you have to trade. You can try some of them on demo accounts for some time, and then you can pick up one or two, then you come to live, right? It's always good to do that. Then we have liquidity risk. Liquidity risk is money risk. Money risk, liquidity risk. The forex market is generally highly liquid. That means the forex market has a lot of money. No, say money. A lot of money is in the forex market. It's highly liquid. But sometimes, especially in the evenings or at night, Sydney, Australia, and Asian session, the market tends to be low volatile. The market will be sleeping. But when we come to London and New York, you will see that the market will be awake. There will be activities left, right, center. Right? So we can see clearly. Now the question is, what kind of trader do you want to become? And what do you intend to do? So if you want to be a high risk taker, you can start defining yourself. Low risk, medium, you can start defining yourself with all these things. You can define yourself. All right? Probably yours is not on volatility risk, but rather leverage risk. Or yours will be liquidity risk. What kind of risk do you want to take? I always say, take a calculated risk so that when the worst happen, you have something to follow. Right? Always take a calculated risk. All right, we go on to the conclusion. The conclusion. Today is just an opening day. We are just opening the class. All right. So by the time we get to the other parts, where we get to technical analysis, fundamentals, and even into sentimental, how to analyze, how to do all these things, live chart analysis or live data analysis, we would then get to know and put together a particular trading strategy to face the market. All right. So let's come to the last part, which is the conclusion. Conclusion and key takeaways. At this point, I would ask, what have you learned from this very presentation? Today is a warm-up, but at least I've gone a little bit into certain areas, deep into certain areas. So the question is, what have you learned? What have you learned? Let me pause the recording for the questions and answers. Let me pause, then I continue. All right. So let me pause it. All right. So Emmanuel says he doesn't know the types of traders and he would love to know more about that. All right, so let's go into that quickly. Quickly. We have scalpers. Scalpers are these kind of traders that goes into a trade and comes out. The trade lasts for some hours, all right, but not over a day. The trade lasts for some hours, some few hours, sometimes even some few minutes, right? They just go in and they come out. They go in, they come out. These people, we call them scalpers. Then we have the intraday traders. Intraday traders can be scalpers. But with these type of traders, within the day, 24 hours, their trades would close, all of them. They don't hold a trade till the next day. Their trades will close, or they will close it. Whether profit or loss, they will close it. Remember, all this thing is based on the kind of strategy you are using. All right. Then we have the swing traders. With them, they can move from some days to some weeks. They love to trade from a swing to the other swing. So from swing to swing, that is what they do. So from a swing low, let's say market has moved all the way to this bottom, then they buy from here, they hold it, they get to this high, they sell from here. That is what they do. They swing. All right. Then we have the position traders, like the banks. They don't care what is happening. They buy it and then they forget. Market should go. Market can do like this, come like this, do like this. They don't care. Market should go. It will go. All right. So with position traders, they can hold the position for a very long time. Months, years, they can hold it. All right. So scalpers, some few minutes, some hours, they will be out. They'll go in and out. Intraday, within a day, 24 hours, they are done. Then we have the swingers from days to sometimes to some weeks. Then we have the positions. With them, they can hold the position till Jesus Christ comes. All right. Okay. If your question is answered properly, I think you should give me a thumbs up. If not, a thumbs down. All right. Anastasia Amon. Wow. Anastasia is here. Anastasia, your mic is open. In fact, Anastasia, your mic is open. In fact, let me pause. But anyways, I will give the Anastasia the room. to talk. Anastasia, please. Your mic is open. You have to unmute yourself. It looks like Anastasia is not getting it right. So let me move to somebody who says is Zoom user. Okay, I have asked you to unmute yourself, Zoom user.
Okay, yes. I think my name didn't come.
Okay, so that's basically it. That's basically it. If you have any other questions, you can write in the chat box. From now, I'm not going to take any microphones. All right. Okay. So from here, we're just moving straight. The last part of it. Let me check. Okay. Okay. We'll go on. All right. So guys, the class will continue. We have a lot to learn. Okay. So we are taking a lot of time to go into each session one after the other. All right. Especially the fundamental aspect of the Forex market. When we get there, it's going to be very, very interesting because you are going to learn a lot of things about the fundamentals. A lot of you, I think, you have the ideas that when the data is red, then it means a sell. When it is green, it means a buy. A data can be green and it will still sell, right? So we would learn a lot. We will also come to learn some strategies that we would use to make profit in the market, especially some of the basic strategies, some of the basic ones. Okay, that one is a parcel or a gift that I've prepared for you guys at the latter tail of our whole class. All right, guys. So if there are no more questions, I would say thank you all for coming. And don't forget, this very Wednesday, we will continue with our class. It's a honor and privilege having to have this nice class or presentation with you all. At this point, my boss is not around. At this point, I will say thank you all for coming. Don't forget, we'll be having the next class coming Wednesday. All right, guys. So I will say bye for now.